Right, everybody. I know that there's going to be a few more folks still filtering in, but I wanted to get started. So hello and welcome. All right, let's see. Oh, here's somebody else. So I'm going to have to welcome, and then I'm going to also have to man the waiting room. So if you guys are patient with me, but hello and welcome to finding out all you need to know about long-term care insurance, the good, the bad, and the hybrids, a Ruth's House Lunch and Learn exclusive. I hope everyone is doing well and enjoying the warmer temperatures, although today is a little bit chilly and I think they're forecasting snow, so I'm not sure about how warm it is. And I don't know about you, but I am ready for some warmer weather so we can spend some good quality time outside, get a chance to visit with friends and family again. Vaccinations are well underway and the world is beginning to feel just a little bit more normal. And I think that's really a huge sigh of relief for everybody. We appreciate you being here, and I am sure you will have some great takeaways from the presentation. Now, of course, I want to thank you in advance for your patience in case we experience technical difficulties as we navigate through our virtual platform. This presentation will cover all the questions that you have had along the way regarding long-term care insurance. Is it worth it? What does it cover, etc. So this presentation will be interactive and there will be time for Q&A at the end. To ask a question, either raise your hand or type in the chat section. I will try to get to as many questions as possible. Once I am finished, my co-host Christina Tui will give you a quick virtual tour of our beautiful assisted living residence, Ruth's House, because ultimately the lunch and learns are usually held on the premises. And then Christina will introduce David. David will present. Then we will have our Q&A segment. And then I will pick our lucky raffle prize winner, which is a Max. It's a Max group, really. So this I got at Max Burger in Longmeadow, but it's really available to all the Max group locations. Mia, Burger, Downtown, Fish, Oyster Bar, Tavern, Trumbull Kitchen, and Savoy. So there's quite a few. Now, of course, most of you already know me, and for those of you who do not, my name is Marianne Shelb, and I am Director of Business Development here at JGS. The JGS campus is not only a great place to work, but also to live or rehabilitate. With that said, I would be remiss if I didn't take this opportunity to share with you all the options we have on our Longmeadow campus. So let me just, I want to be able to share the screen again. Okay, hold on, let me see. I want to do this. Hang on a second, give me a second. Okay. Let's see, where'd it go? Put you guys over here. Could everybody see that?
Yes.
Okay, perfect. So we are 23 acres right on Converse Street in Longmeadow. We have, this is Converse Street, to the left is Converse Street. So we've got our whole campus kind of set back, especially Ruth's House Assisted Living and our Warnock Adult Day Health Program, really kind of set away from the hustle and the bustle of the main drag, which makes it kind of nice. The Levitt Family Jewish Home is, of course, our 24-hour skilled nursing facility, including long-term care, long-term rehabilitation with secure neighborhoods for our curious and exit-seeking residents. We've got the Sossin Center for Rehabilitation. It's the first greenhouse model of care in Western Mass. It features 2 small houses, all private rooms, all private bathrooms, consistent care teams, and all in a home-like setting. So if you're looking at the photo, this is a family sitting at the dining room table and the kitchen behind. So you see the pendant lights. it really gives you the feeling of your home, right? So literally the dining room table was from Pottery Barn. So all of the furnishings are even home-like, as opposed to very institutional and, where you buy them and you see them everywhere. This is very, very much a home-like setting. We've got Wernick Adult Day Health, your loved one safe and cared for in a dynamic setting, promoting social interaction and stimulation while you are able to work or run errands without any worry at all. Spectrum Home Health and Hospice, quality care that comes to you in your own home with a personalized plan for each patient, because of course everyone is different. And then we've got Genesis House, which is senior independent living with efficiency in 1-bedroom apartments located on the JGS Life Care campus with access to our family of services for your continuum of care. So everybody on the campus is able to access anything on the campus. Now we're similar to almost like a CCRC, but we don't have that big buy-in. So people coming into the campus only really pay for the services that they need, which makes it very nice. Oh, let me just admit. So everybody pays for what they need. One thing that we differ is we do have spend down options, which make it very nice. Genesis House is actually a subsidized property, which in Long Meadow, and you could see by the outside, it's absolutely gorgeous. And the inside is just as nice. So we've even got in our assisted living, we've got spend down options for people where, a lot of times, people have a certain amount of money, but then when they don't, we don't want to say, hey, you were great when you had money, but now that you don't, you're going to have to leave. So we've got spend down options for people, which makes it really nice. Oh, we've got more people. Okay. All right. So then last but not least, we've got Ruth's House Assisted Living. Set back away from the main street with very private and wooded backdrop lies our gorgeous home-like setting for both traditional and memory care residents. Now, I don't see Christina on the call yet, so I'm going to do the tour. So give me a second. I'm going to put this down. Everybody can see my puppy. That's Bailey. Everybody's looking at my puppy, right? So I've just got to bring over, I've got a YouTube video I'm going to share, and I'll walk you through. So let's see. Okay. This is Ruth's House Assisted Living. So this is the outside coming in the main entrance, beautifully landscaped, very nice. If you've never been, I'd love to be able to show you. You've got the lobby when you first come in. You've got a library, and then you've got nice big hallways. This is a lending library. A lot of the library books have large print. Our dining room, the large windows in the back actually are looking out onto our waterfall. Tweety to the left. This is one of our fireplace rooms. And then we're going to look into the country kitchen, which we've got snacks and beverages available all day. The freezer in the back has popsicles. Our salon available by appointment, very reasonably priced by PS Salon.
Marianne, we're not seeing the actual tour.
You're not?
No, we're seeing your presentation screen.
So
are you on a different tab?
What was that?
Are you on a different tab, maybe?
So
we're only seeing the PowerPoint. We're still on the PowerPoint.
Really?
Yep.
Let me stop sharing. So the YouTube, I dragged it over to where I was sharing. Hold on, let me press pause. All right. So I'm not sure. Let me try again. So let me put this down. Thank you for telling me, Amanda. So if I go share screen again, and I'm going to still do this one. Can you see the YouTube?
Yeah, now I do.
You can.
Mm-hmm.
So
yep,
now if I
like
actually, so you know what? Maybe if I press full screen, it doesn't work. Hold on. Testing 1, 2. Can you see it now?
Yes.
Yo, you can. So I don't know what happened. That's where it was the last time. All right, so I do apologize. We're gonna go real quick, right? So this is the front, nice landscaping. See, normally Christina does this. We've got lobby, library, nice big hallways. Again, a lot of the books are larger print. Dining room, the large windows in the back overlook the waterfall. Tweety, been a resident for a while now. One of our living rooms, we call it the fireplace room. Country kitchen, snacks and beverages all day, freezer in the back, popsicles. Did you miss that part? Salon by appointment only. PS Salon is the one who actually comes in. Many patios. This is the waterfall, although it must have been colder, so it's not working in this photo, but if you come see it, you'll see it working. But lots of decks and patios to overlook the beautifully landscaped property, which is really nice. We've got a couple of really large living rooms, so you have more space than just your apartment. Activity room that just got redone, as a matter of fact. So this is a little bit older photo. And we've got the sunroom, which is what we're doing. We're utilizing that for our outdoor visits right now. This is our memory care activity room. It's got a nice big view also of the waterfall and the secure garden. So it's all fenced in. So it's beautifully landscaped, so you really can't tell that it's fenced in. This is the dining room on the memory care level. And then there's a couple of different living rooms there as well. This is one of them. They just sit, they'll watch TV, we'll have activities there. So it really depends on what the activity staff has going on. Example of one of our studio apartments. So this is a larger studio. So it's almost like, it almost looks like a 1-bedroom. We have different sizes. This is a large 1-bedroom. You've got the kitchen area. You've got dining area, so enough room to put a table in, and then you've got living room area. They're actually pretty large, which is nice. The bathroom itself, you could access from either the living room or the bedroom, which is nice on this model. So we're gonna walk, I believe this actually walks back through the bedroom. Lots of windows, lots of great light coming into all the apartments. And of course, this is a view of the woods. So again, it being set back from the main drag, you know, you're not looking at a busy road. This one, I love this one. This one has a beautiful walk-in closet. We've got a lot of them that have like the closet organizers, which I love. And this is the bathroom, of course. Really good size, very comfortable. If you were to live there, this would be something that, you know, we would be able to live in, right? We'd be very comfortable there. All right, so now I am going to stop sharing. Okay, so you guys were able to see that one then, yes?
Yes.
All right.
Oceanside Verbo
Perfect.
is about to become the backdrop for an unforgettable vacation.
All right, so hold on, I'm still sharing apparently.
Rare moments with kids.
All right, so let me actually get out of that, and I can actually X out of that so it doesn't accidentally come up. All right, so let me just pull back. So we did Ruth's house. All right, so now I want to be able to introduce David, right? So let me just read a little bit of a bio. David E. Fedor is the CEO at Fedor Financial Group, LLC, located in West Springfield, Massachusetts. His mission is to help his clients afford the retirement they deserve. He specializes in helping them not outlive their money, which I love that phrase. He uses it often. He does this by creating and implementing risk reduction strategies using investments and insurance products. David loves the challenge of helping a new client create a retirement plan designed to meet their goals. He is proud that he has maintained client relationships for decades and is now working with families consisting of 4 generations. That's a lot. His practice is primarily fee-based. This means that the success of Fedor Financial Group, LLC is directly tied to its clients' financial successes. So with that said, I'm going to X out of that. David, the floor is yours.
Okay. Thanks for having me.
Of course.
Happy St. Patty's Day, everyone.
Oh, that's right. I forgot to say that.
And we forgot our green today.
Yeah.
But there's some green on your wall I see behind you, so that's good. All right, so my presentation uses green as a background, so I think you'll like that. I'm Dave Fedor, President of Fedor Financial. I've been helping people to retire comfortably, not outlive their money for almost close to 30 years. So what I'm going to talk about today is some long-term care insurance, who it's good for, and different types of long-term care insurance programs that are out there that can be used. So again, thanks for joining us. And without further ado, I'm going to see if I can share my screen.
So I think I'm going to make you host. So you should be host now. It should be coming over and you should be able to share your screen.
Okay,
There you go.
that work? Can you
Nice.
see the green with the elderly couple?
Yes, I do.
Okay,
Yep.
great, awesome.
Nice.
So I just switched gears here. We're located in West Springfield, by the way. My contact information is there and it'll be on the last slide as well. So today we're going to talk about what is long-term care, because you have to know some of the basics of how it's defined, and then why is planning important. If you have $5 million or more, I wouldn't worry about it. You have plenty of money to take care of it. If you have $500,000 or between $500,000 and $1 or $2 million, you might want to worry about it because it could really impoverish you or your loved one. And then whoever is remaining, if you're a couple, could have a lot of problems trying to pay for their a healthy and happy retirement. So next we'll talk about Medicare versus Medicaid, because two different government programs, a lot of misconceptions about who pays what. And then finally, we'll talk about some private long-term care options. There's always the option of, like many people do, the option of doing nothing. That's most people's long-term care option. And in fact, just a quick story about my parents, and one of the things that led me to doing my job that I do today is probably 30 years ago or close to it. When I first got into the business, I was working for John Hancock Life Insurance in Holyoke, and they were selling like long-term care insurance at the time. So I said to my dad, I said, Dad, who's maybe about 65, I said, I think you ought to look at long-term care insurance. I think you and Mom should get it. And Dad said, no, Dave, I have a plan. Don't worry about it. Don't worry about it. So fast forward about 20, 25 years, and my mom got really sick. She came down with vascular dementia. And now they're in their 80s, right? So Dad is their primary caregiver, and he's like 85 years old. He's helping Mom go to the bathroom, all kinds of situations, their health care and everything else we had to deal with as a family. And finally, I said to Dad one day, I said, Dad, what was your plan for long-term care? And you know what he said to me? He said, David, I thought your mother, he thought he was going to outlive, or he thought my mother was going to die first. So that was his plan. He thought it wouldn't be an issue. He was going to be long gone. So let's not do that. Let's plan. Now, it breaks me up a little bit when I think of that, because it could have just been a lot better for Mom if he had taken some appropriate steps. Anyway, so why is planning important? People are living much, much longer today. My dad finally passed away at 90 after a long period of time of taking care of my mom. In the Middle Ages, people only lived to their 30s. So to be an 80-year-old or 90-year-old back then, it was like you're ancient. But today, well, I have a client who lives in North Carolina. She used to live up here in Western Mass in West Springfield, and she just turned 102. And I went down to North Carolina for her 100th birthday party, which she emceed. She was the one in charge of setting up that party, and it was pretty awesome. So still a client today. She said she already lived through one pandemic, and this one here isn't going to get her. So she was around in 1918. Anyway, extended care is more expensive today than it has been in years. Marianne, I'm sure you can speak to, these different places. Assisted living facilities are really popular today versus a nursing home. Who wants to go to a nursing home, right? That's like not a fun place to be. But assisted livings, a lot of people use those, and they're not cheap. So today's long-term care policies will actually pay for any one of the three things you see on your screen: in-home care, assisted living, or care in a nursing home. So that's really powerful, especially the in-home care and the assisted living, because that's obviously more and more people are choosing to do that. Unfortunately, like anything else, long-term care costs are projected to get more and more expensive over the next 15, 20, and even longer. As of right now, the average cost in a nursing home being $131,000, projected to double in the next 15 years. Totally wouldn't surprise me based on what I've seen. I mean, I think many of you are in the caring field, and I think you would agree that the cost of caring for people has gone up exponentially. So crazy numbers, but the future cost of a 3-year stay in a nursing home is $750,000. That's why I say people that have $500,000 to $1.5 million, let's say, or $2 million, those are the people that are right in the bullseye, because if you have to pay out like almost $800,000 in terms of long-term care insurance or expenses, I mean, how much is left for your spouse to live comfortably? So that's the question, that's the concern. And that's why some people do plan ahead and actually will get some kind of insurance. The good thing is there's way more types of insurance that you can get now. Sorry about that. I'm going a little too far here. I skipped something before. So what is long-term care? It's help with the activities of daily living, okay? Also assisted living, custodial care, home care, and adult day care. It is not skilled care or just nursing home care. The other thing I wanted to show you, okay, is my little mouse here is fast forwarding a little too fast. So we want to talk about the activities of daily living. 1 second, please. Okay.
This is where the patience for the technical difficulty
Yes.
comes in.
Yeah, my scrolling mouse is a funny thing.
That's all right. We're all trying to navigate this virtual platform, so no worries.
So what's your plan? Start by asking these questions. Do you feel as though you're going to live a long life? Do you agree that the longer you live, the greater your likelihood your health could become compromised? So that was mom and dad. Again, dad never thought he was going to make it that far to 90 years old, because he had a heart attack in his 50s. And then just, it's quite amazing what they're able to do with people to extend your life. Most importantly, if you needed care, what impact would that have on those who you love? So you're not only your spouse, but also your children too. All right, see if I can go one click here. Medicare versus Medicaid. So this is interesting, what the two different programs will cover. What will the government pay? So essentially, Medicare, you don't want to count on that. It's for limited stays. It's not going to pay the whole thing after a certain amount of time. Medicaid, sure, that'll pay for long-term care, but that's only if you're basically broke. So we'll go into that a little bit more detail. Medicare will pay for skilled care, but you have to meet the requirements. 3-day hospital stay. A lot of hospitals now, I'm told, are, well, Marianne, you can correct me with the terminology, but they're like watching people. They're not really admitting them. So you might be in the hospital for 3 days, but if you then get put out to a recovery facility, you didn't have that required 3-day stay because you were like being watched or observed. I think observation.
Right, it's, yeah, so to have a 3-day qualifying stay, right now, it's of course being waived due to COVID. But a lot of times, and we're just wondering if that's actually coming back. So there might be a possibility that's not a requirement. We're not seeing it now because of the waiver, because of the pandemic. But yes, there was a 3-day qualifying stay in place. Otherwise, if you came to a nursing home, it would be private pay.
Thank you. So even with the being eligible, Medicare would only pay for the first 20 days in full. And then after that, there's a copay essentially. And then after 100 days, it's all on the customer anyway. So has anything changed there, Marianne, or that's the same?
That one more time? Sorry, somebody was trying to get in and they're not, I don't see them in the waiting room, but go
I
ahead.
just admitted her because you gave me the power.
Oh, you did? Okay, perfect.
Yeah, I saw it pop up. So after 100 days, it's all on the person receiving the care. Medicare stops paying essentially.
Yeah, so you have to, I guess it's going to be dependent on if they're making progress still. I don't know. I think there's, Terry, actually, you're on the call. As far as 100 days, they could actually, if they're still making progress, they could still be covered depending on if the 100 days.
So hi, everybody. So 100 days is sort of the maximum benefit in a year. And, but you have to continue to be needing skilled services. So even though you might have that benefit and haven't exhausted the days, if you're not needing the skilled benefit at that level, it doesn't continue to pay. And I think that the coinsurance has gone up a little bit at the beginning of this year. It changes year over year. I think it's 182 now, but yeah.
Okay, thanks. Okay, so what does Medicaid pay? So again, Medicaid is the government program that will really only pay if you have extremely, extremely limited assets or resources. So they require you to spend down your assets. There are certain funds that are accountable assets and certain funds are not accountable assets. You have to agree to certain income limits. You're subject to limitations on your where you can stay. That's what subject to bed availability means. And a lot of people have heard of this one. There's a 5-year look back on asset transfers. So many people, like I have a client who she just sold her house, or her house it's about to be sold. Supposed to be closing at the end of the month. And her daughter's selling her house also, and the two of them are going to co-live in the same house together when they buy a new one. And the daughter's plan is to have mom put in all the money into this new house and the daughter's going to own it. And I said, hold on a minute there. There's rules and regulations against that. Well, sure, she can do it, but that could disqualify your mom for long-term care coverage that she might have gotten otherwise from the government. So you have to be very careful about that. And I would definitely bring in an attorney. And that's what I did with her. I said, don't do anything like that until we have a conversation, me, her, the mom, and the attorney, so that we can figure out a plan that works for this family. And if you don't figure it out properly ahead of time, the assets can be recovered by Medicaid even after death. So they can put a lien on your house. For example, if you transfer your house and you don't get past the 5-year waiting period, that's a problem. So actually, in that case, there's a situation with my wife's aunt who I brought in an attorney. She wanted to give her house to her son. We instead set up a trust. Now the trust owns the house. The mom lives in the house still with her husband, and the son is a trustee of the trust. So we accomplished what she wanted to do, which was to get the house to the son. But he doesn't own it directly. So now the next thing is, though, which is really cool, she actually pays rent to the trust. So she's actually getting more money out of her estate that way by paying rent into this trust to that essentially is owned by her son. And then the last point is that because there's the 5-year look back, even though it's a trust and everything, it's still, you transferred an asset to a trust. You transferred it out of your name. There is a 5-year look back no matter what. The way we are sort of getting around that, but not really, is we set her up with a minimum long-term care policy that meets the government requirements that they will never attach or put a lien on her house. So it's not a great policy. It's not going to pay for a lot, but at least it covers what the government says you have to have. And that's going to get her by that 5-year look back period. It's, if she wants to keep the policy after that, she can, but she can also drop it, and her house to, I think, a $300,000 asset will have been protected. So there's lots of cool things that can be done. You just have to talk to the right people. Anybody? Oh, I don't want to. You can ask me questions about that one at the end or offline. So what are your private long-term care options? This is like what I did for the aunt. All qualified long-term care plan benefits are income tax-free, which is very nice. Benefits are collected in one of two ways. Unable to perform 2 out of the 6 activities of daily living. You guys have probably heard of those, most of you. Or cognitive impairment. Just if somebody is declared to be mentally incompetent, has dementia, Alzheimer's, or any form of that, they will automatically qualify for getting long-term care benefits, provided they already have the policy before that happened. So the key is, and I see this all the time, people want to get the long-term care insurance when they can't get it anymore. When something has happened medically or physically, arthritis is too severe, now they can't move around. That's when I often get the calls to apply for long-term care, and you can't get it. So let's talk about different solutions that can provide the answers. So standalone long-term care policies would be, that's what most people think about when they think of long-term care insurance. That's what I used to sell 20, 30 years ago. You would just pay an annual premium or even a monthly premium. That's what my aunt is doing. She pays an annual premium towards that policy, and that provides that benefit, which is the minimum required to get around the 5-year look back. It's the cheapest way to go. And however, if you don't use the insurance, you lose it, just like your auto insurance or your homeowner's insurance. So, but if you think about it, what are you protecting with a standalone policy? You're protecting the rest of your assets. So it could be worth it, depending on how much money, how much cash flow you have. A lot of that depends on how much cash flow you have, because you have to come up with that premium each and every month or every year. The next way people like to do it, and this is more in vogue now. I really like it. It's a pretty great way, I think, of leveraging your assets, because a lot of people have done the right things and they put aside X amount of dollars. For example, I'll give you a client of mine. She and her husband had $100,000 apiece in 2 different savings accounts. And I said, Jackie, why do you have 200 grand sitting in the bank? You have me as your financial advisor, and we're making 7 or 8% on this other investments. And she said, David, I don't want to invest that money. I want it to be there just in case we get sick. And I said, you mean long-term care? And she said, yes. And I said, great. Would you mind if I showed you a way to leverage that 200 grand so that you can have 3 or 4 or 5 times more, maybe more, in terms of a long-term care insurance benefit? And she's like, what are you talking about? And I said, you can get, it's like a hybrid policy. It's a life insurance and long-term care insurance policy. This is the one that's my favorite, because no matter what happens to you, you're going to get your money back. Either you're going to get sick and need the long-term care insurance, in which case you've leveraged it up, assuming you were in decent health when you applied for it. You're going to be able to receive maybe $100,000, $3, $4, $5, or $600,000 in additional in insurance benefits if you need it. And that again would pay for home health care, assisted living, or nursing home. Okay. But on the flip side, unlike the standalone policy, number one, number two is would pay out if you passed away. So if you never used your long-term care pool of benefits, your beneficiaries on 100,000 might get 150,000, 200,000, or possibly more in terms of a tax-free death benefit. So it's a win-win situation, if you can call it that. It's better than the alternative, I think, of paying and paying and paying until, you know, you pass away and then you paid all this money and maybe you never used it. So that's why the linked benefit hybrid policies are so popular, because you put the money in, it's your pool of money. If you decide to close it, there might be a penalty, but you can get your money back minus the penalty. And as I said before, if you use the long-term care insurance, it's going to cover a lot more than you would have if you just left your 100 or 200,000 in the bank at 0.1% or even 1%. You know how many years it would take to at 1% to grow to how much leverage you can get the other way if you can qualify? Problem is with these things, number one and number two, you have to be in pretty good health to qualify. My aunt-in-law had a super tough time due to a medical condition that she had, that she almost didn't get that standalone policy. In fact, her husband couldn't get it because he's a diabetic. So we're keeping our fingers crossed. Now, number three, and this one's really cool too, because as far as I know, nobody's really talking about this. And anybody who's got an annuity out there that is a tax deferred annuity, they have now the ability to turn all the interest that you've accumulated into tax exempt, as long as you move it into a qualified linked benefit annuity. So let me back up a second and tell you what an annuity account is. Some people may already know this, but just for those who don't, if you have a deferred annuity, which is very common out there with older people, then you have money invested with an insurance company, and either it's paying you a set interest rate, either 2 or 3%, or it's invested in stocks, in which case it's a variable annuity, and it pays whatever the market pays. Either way, if it's money that you put in there, you have your cost basis, which you put in, and then you have your interest, which is tax deferred, right? So to give you an example, let's say, well, there's a judge, a client of mine, retired judge, who I opened up an annuity for like 10 or 15 years ago, right? So he put in, I forget how much he put in, but hypothetically it was 100,000, and now it's worth like 200 because he had a variable annuity and it's done well. So the difference between the current value and his original investment is all going to be taxable in the future, or when he decides to start drawing on it. Now, with the linked benefit annuity, he can access, if he gets sick, he can take out all that money and pay zero tax on that interest. This is the only thing that gives you zero tax. It converts a taxable account, which is the interest that you've deferred, into tax-free, as long as you're using it for qualified long-term care, assisted living, or home health care. Okay, does that make sense? That one is amazing. I can't believe they allow that, because where else can you have an investment that's normally taxable or tax deferred, but eventually taxable, and convert it into tax-free? Nowhere, as far as I know. So linked benefit annuity is really fantastic. If you think about the amount of money that it can save in taxes, in income taxes, it's really a no-brainer for people that have these older annuities and that the person is like older themselves. Oh, and the other hand too, the other good thing is it's not as difficult to get as option 1 or 2. So linked benefit annuity is you still have to medically qualify, but the qualifications are much easier to get. So that's a nice aspect of that. So this is really the meat and potatoes of the whole presentation, these 4 options. The 4th item is the accelerated benefit life insurance. So a lot like it's pretty much like number 2 in many, many ways, except it has more emphasis on the death benefit being higher versus the long-term care benefit. So number 2, certain companies will enhance the long-term care benefit at the expense of the death benefit on their hybrid policy. On the flip side, if you kind of already have long-term care mostly covered, then maybe you'd be wanting to get the accelerated benefit life insurance, which would have a higher death benefit for your beneficiaries, but still also you can tap into a pool of money to pay for long-term care. So hopefully that makes sense. The difference between 1 and 2 isn't a ton, but if you work with an independent financial advisor like myself, I go out to a third-party company who works with a bunch of different insurance companies. And I'll give the inputs of Mr. and Mrs. Jones are on this medication and they have these health conditions. Then we look at the different options and we come up with a couple of solutions possible. We say, well, you could do maybe like a Genworth policy. People didn't like that one so much, even though they paid higher benefits. Genworth was a little bit of a shaky company because that's GE, and GE's had some rough times. Versus a more solid company like Pacific Life or just a different company. There's a lot of different players out there, and different companies will give you more coverage for a given health condition than other companies will. So it's really kind of, I think it's a pretty cool thing to be an independent advisor as opposed to, if I'm just a Mass Mutual guy, I'm just going to be pushing the Mass Mutual policy because that would pay the most commission. So commission is not important to me. It's more important to do the right fit for the client so that they're happy and then they stay with me for 3 or 4 generations. So activities of daily living, what are they? This is kind of important because this is how you can qualify. Remember earlier, I said you have to have problems with 2 out of the 6 activities of daily living. These are them. So problems with eating. My mom had all these: eating, bathing, getting dressed, toileting. Dad was good up until he was about 85, and then he fell on his head and he had vascular dementia. So he would have qualified, but he didn't realize he had it. So, and it was tough because he was really good in other areas. So anyway, those are the ADLs. And then we talked about the standalone long-term care policies. This is just a little bit more detail on how they work. So you have a daily or a monthly benefit. It's usually like $300 a day or $500 a day that it would pay towards the cost of long-term care in a facility or at home. The benefit periods are anywhere from 2 to 5 years or lifetime, although they've done away with that, but that used to be. One really important one and a good one to make a note of is inflation options, because if you're 65 or 70 even, you probably would want to get a policy with an inflation adjustment that's automatic, because darn well the cost of assisted living in nursing homes and even home health care is not going down in the next 5, 10, 15, 20 years. It's going up. So if you have a policy that automatically inflates your benefit amount, you're going to be far better off, but they of course cost more. So there's always that, but I'd still think those are better. The elimination period is, well, the insurance companies aren't usually going to pay for the first 30 or 90 days because they figure you're going to get covered by Medicare. Well, I don't know if that's going to be the case or not, but it does help to lower the premium also. It's just like a deductible on your auto insurance. The higher you raise your deductible, the higher or the longer your elimination period with a long-term care policy, the cheaper it is to purchase. Okay. The last item is, it is a factor. I mean, How stable is the long-term care insurance company that you're looking at? Will they be here 5 or 10 or 20 years from now? Who knows for sure, but if they're unstable now, there's a good chance that they might not even be around when you actually need them. As a matter of fact, Genworth has gotten out of the long-term care insurance business, and they used to be one of the most popular ones. So I kind of covered this. Long-term care can cover, let's say hypothetically, $5,000 a month in your care. That's a $60,000 per year benefit. If you have a 3-year policy, it'll pay up to $180,000. And then a lot of people will go with a 3% inflation option. And usually people will go with a 90-day waiting period. So if you did do that, you'd want to have enough cash in the bank to pay for that 3 months in a nursing home or assisted living, just in case the Medicare doesn't pay if you didn't qualify. Now, again, a little more detail, I kind of explained earlier, but more detail. The linked benefit hybrid policies or life insurance with a long-term care rider, you move a lump sum of money to create leverage with that. So if you don't have $100,000 or $200,000 lying around, you're not going to do it. You don't have the money to do it. You need a large amount of money to do this to make it worthwhile. It's cost sharing your coverage, but you do retain control of your asset. As I mentioned earlier, if you can always change your mind and take the money back, but you'll have a penalty. And as long as you keep it, the good thing is you don't have to pay any more premiums on it, which is nice, even if insurance costs go up and whatnot. So you can keep it for your lifetime. And then if you pass and you still own it, your beneficiaries get tax-free death benefit. That's number 2. That's an example. This one here, I didn't create this slide. I got it from a different company. As you can see down to the bottom, Ash Brokerage is the third-party firm that we go through to shop around our insurance policies for our clients. So I haven't seen one with this much leverage, 100,000 to 900,000. I've seen them go from 100,000 to 500,000 or 600,000 in terms of the leverage, but not to 900. So I wouldn't put too much stock in that one. Advantages of linked benefit hybrids. Again, client doesn't put in a lot, but you get a lot of leverage on the monies. This one here was one of my other favorites, the linked benefit annuity. So it's an annuity with a long-term care rider. You can add your spouse to the plan, depending on the company. It has to be non-IRA money. It'd be nice to do it with IRA money, but there's no way they're going to let you do that because they want the taxes from that. But with the judge that I told you about, he had like 100,000 he put in, and it was worth 200,000. The entire 100,000 of interest that he never paid a dime on, he had 2 choices. He could have left it there, and then he could have, when he passed away, his beneficiaries would get 100,000 or more of tax deferred interest that they'd have to pay taxes on when he died. Or he can convert it to a long-term care annuity, and then if he needs long-term care, he can tap into that and pay his care in a tax-free way. So it makes a lot of sense to do that if you have that already. Again, some of these things you already have to have in place. Either you have a lot of money sitting in a bank account and you do the linked benefit life insurance, or you already have a lot of money sitting in a long-term, in a regular tax deferred annuity, then you can do this hybrid thing. And then if you have life insurance already in place, you could potentially, if you're still insurable, convert it to a long-term care, a life insurance policy with a long-term care on it, or a long-term care rider included in it. So that is very, very nice. Again, a third thing where you already have to, it helps if you have the life insurance already in place. And it's not a term policy. If it's a policy with cash value, those are the best, where you can take some of the cash value in that, apply it towards a new policy, and get a policy that does two for the price of one. It does your long-term care protection and your life insurance death benefit at the same time. So those are nice if you have something like that in place. If you don't have life insurance like that in place, you can absolutely do it. It's just we have to look at to see what company is going to give you the best. If you have any pre-existing conditions or medications you're on, and there's just a little bit of moving parts to that, and you definitely have to be in okay health. The only way you don't have to be in super great health, the only type or method that you don't have to be in the best of health was the third one, which was the long-term care annuity. So hopefully that didn't confuse you too much in terms of the different options. There are 4 basic options. There's traditional, there's the long-term care hybrid, there's the one that emphasizes insurance as opposed to long-term care. Insurance, it emphasizes the death benefit. And then the 4th item was the long-term care annuity. So it's just about talking to somebody who you feel comfortable with. And sometimes I would recommend bringing in an attorney if you're talking about gifting and more, you have other moving parts. So you kind of need a team, and that's the approach that I like to do. I don't like to do it alone. That's why I have Ash Brokerage behind me. I'm an independent financial advisor, but I have a big company behind me, Ash Brokerage, and they're totally independent too. It doesn't matter what carrier that we use. So that's it. That's what I have for my presentation today. Hopefully that helps with the different types of long-term care insurance that are out there and what your options are. I'm David Fedor. I'm located at 1252 Elm Street in West Springfield. I'm a certified financial planner and chartered retirement planning counselor. And if you need anything, my contact number is 726-9044. Please feel free to reach out.
David, thank you so much. Obviously, long-term care insurance, there is a lot of questions about it, but I love the hybrid model where that wasn't necessarily available years ago when my husband and I started looking. So I love the fact that now it is available. So I do have a couple of questions that came through. It looks like we want to know, what's the criteria for cognitive impairment?
Good question. It depends on the carrier to a certain degree. So I can't answer that question other than they have to be diagnosed by a physician. That I know.
Okay.
Can I just ask a quick follow-up to that?
Sure.
When you say diagnosed by a physician, can it be a primary care physician or does it have to be a specialist?
That at least has to be one of the two. So again, it depends on the carrier. So some of them will accept one, some of them you need more than one.
Okay, thank you.
Yep.
And then David, we've got another one. Is there an age that you typically recommend folks to begin to look into buying long-term care insurance?
Yeah, you can get really good leverage between 65 and 70 years old, or even younger than 65. But most of the time people I see aren't ready to talk about it until they're that retirement age.
So those are the only questions that I have in the chat itself. Does anybody else have any other questions? You can press the space bar. It'll unmute you while you ask. David, you did just such a great job. No one's got any more questions. So of course, David did have his contact information up. So, maybe sometimes it gets a little bit more personal. So if you have any questions, you could reach out to David directly. And we've got some thank yous coming up from the chat. So that's nice. Oh, and then, all right. So David put his number in there again, 726-9044. And then will there be a transcript? So basically what we do is there's a video and we put it on our website under education. And, or actually, I want to say it's under education and it goes to the Ruth's House Lunch and Learns. So we've just got to take a few days to get it on the website, but then yes, it will be on the website. So again, I want to thank everybody for attending. I would like to now pick the raffle winner. So everybody,
Marianne?
yes.
One second. I have a colleague of mine, Larry Blenderman, on with us. Does anybody have any questions about Medicare supplements? Because that's his area of expertise.
So Larry, I have a question for you. So when we were talking about the 100 days, now in a previous life, we referred to the lifetime, to tap into a lifetime benefit. What is the lifetime benefit?
Larry, you're muted.
Yeah, you're still muted, Larry.
When you're asking about the lifetime benefit, are you talking about the lifetime benefit for Medicare?
Yes.
Basically, Medicare runs on a 12-month, on a 12-month cycle. If you have a claim and you put it through, after a period of time, I believe it's like maybe 6 months or 90 days. If the reoccurring thing happens again, it's considered to be a new claim. So does that answer your question?
Somewhat. I think that they're
In other words, the same thing can happen again and again, but it has to go by a certain period of time before it's considered to be a new claim.
but that's still within the 100 days. So it's strictly just 100 days a year. For some reason, I thought it was 100
Yes.
days, plus
Yes.
there was this lifetime.
Yes.
So the lifetime benefit is still within the 100 days per year.
Yes. Yes.
Okay. Okay, perfect.
That's my understanding, is that after the 100 days, you basically are not, there's no payment. But if it happens like in the next year, it opens up another window.
Okay. Okay. All right. Perfect. So what I'm going to do, David, am I back to host?
I'm not sure. I'm not sure. I think you are.
I think I am. Okay.
Yeah.
So I'm just going to put up while I grab a colleague to do the, let me see, to do the raffle. Give me 1 minute. And this is going to be, so I want to thank you for joining, but to save the date for the next Lunch and Learn, we've got Wednesday, April 21st. So give me 1 second.
While you do that, can I ask a quick question?
Yeah.
Sure.
For Larry, does the selection process for supplemental Medicare, does that need to be done in conjunction with planning long-term care insurance, or can they be separate activities?
It can be basically separate activities.
Okay.
When you're talking about a supplement, you're talking about keeping primary A and B, and then just taking a supplement Medicare policy to cover the deductibles.
I'm not familiar with the workings of any of those
Okay,
processes.
well, Medicare, just briefly, Medicare covers A and B, which is your hospitalization and then your doctors and their deductibles. Most people can pick up the deductibles through a supplemental plan, or they can go to Medicare Advantage, which in itself is A, B, and it covers prescription drugs. So most people have one of those two. They have Medicare Advantage and they have, or they may have the supplement. Long-term care is totally different.
It's not going to pay. Long-term care has to be a long-term event.
Yes. Medicare only pays basically for skilled services. It doesn't cover you for the types of coverages, the types of help that people need, like, basically feeding themselves. I mean, the non-skilled type.
Yeah,
of
custodial care.
Custodial, yes, that's the word I was looking for. Most people do have both.
Okay,
So yes,
thank you.
the answer is yes to your question.
Katie,
They're not
you-
mutually exclusive, they're complementary, I
It's
guess.
a compliment.
Right, I understand that. I just wondered, were they related in some way that made it important to do those processes together? Doesn't sound like it.
No.
Okay, thanks.
Katie, you had a question also?
Yeah, it might be a silly question. I don't know. I was just thinking if somebody qualified for like a Medicaid program and they had a long-term care, would the long-term care insurance policy negate them to be able to qualify for a Medicaid program?
Hmm. I'm not sure. I don't know. I'd have to look.
I was just thinking, because there's the programs out there that, dual eligible people might qualify for. So I just didn't know if they had long-term.
Because Medicaid goes by your income and your assets, and long-term care insurance is tax-free. So
Would it be an asset?
off the top of my head, no, it wouldn't be an asset. It's going to be income if you're getting it.
Yeah.
So my guess is no, but I don't know for sure. It's a good one. I'll have to look.
Any other questions before I actually give you the winner of the Max gift certificate? All right, so we've got Ann Holiday. I see that you're on the call. Are you still there? Oh, and and now she's visible.
Ah,
Oh, and she's wearing her green. You're muted, but I could see the green. Very nice. So we'll have to, I think I have your email address. We could arrange, either I could meet up with you to give you the gift certificate. And I've also got this is a menu to Max Burger, but I'll have this for you so we could arrange a meetup. Great, you're still muted. Oh, so it looks like you're unmuted, but we can't hear you. It might be that your volume is down. If you go to the little microphone, the little arrow to the right, you could actually go to audio settings. Maybe your volume is all the way down on your mic. Well, congratulations. You're welcome. You're welcome. If you have a question, you could actually throw it in the chat and I'll be able to see it. Otherwise, what I'll do is I'll reach out to you via email. All right. Well, David, I really thank you for being here. Larry, also, I thank you for answering a couple of the Medicare questions. Thanks for hanging in there. Thanks for putting up with a couple of the technical difficulties we had. My tour, Christina, of course, you weren't here at the beginning and I totally messed up the Ruth's house tour. Here I am going through it and nobody could see it. I don't know why or how, but well, Amanda was nice enough to tell me and then I was able to get it. I don't know what happened the first time around, but we did it. We got through it. But thank you everybody for coming. I really appreciate it. And again, Wednesday, April 21st at noon, we have Leah Doroch, I think it is. She's the CEO of Professional Care Match, and she's also a holistic health practitioner, of course, near and dear to my heart as well. She's going to explain Ayurvedic medicine, how you can incorporate it into your everyday life and what the benefits are to overall health and wellness. So that ought to be pretty interesting as well.
Yeah.
So again, I appreciate all you guys being here and we'll be in touch. David and Larry, again, thank you and enjoy the rest of your St. Patrick's Day.
Thank you.
Take care, guys.
All right. Bye, everybody.